Hey everyone, good morning. Welcome to the room. As you know, trading futures does involve risk. It's not suitable for all investors. Information in the presentations for educational purposes. It's not a trade signal service, not intended to be financial advice. Starting off with our series of retracements. The largest one, the COVID retracement, targeting roughly 5,500, 5,430. Then going down to the smaller time frame, this larger weekly that we traded all the way to the negative 61.8, and so then that puts us into this extension, high to high, that has this the high back here in last July, two all-time highs, and that is just below us, right at the 5,000 level, 49.77. We came down yesterday just below 5,000, and we'll see if we bounce. I drew two shorts, the extension short from where we had a traditional retracement. The chart's a little bit cluttered here. We had traditional retracements, and then I drew the extension, and then I drew the full halfway back. Those are the only two that I'd be paying attention to. I think it's safe to get rid of our uptrend line here. Kind of riding along that 21 EMA weekly chart, this longer term trend line that I've had on here for a long time. It's a ways below us, but just shows how steep we've been in the last couple of months. This was our last swing low, so a 50% retracement would kind of line up with from highs to lows right about that level as well. So that's the one that I'm more interested in, the full halfway back, 51.57. As far as looking for a bigger short. Intraday, well, I threw the overnight highs and lows on the chart. Those have been coming into play quite a bit. Let me get that adjusted now in the last few minutes. So opening here at the high of the overnight session. Here's the low of the overnight session. All of that within yesterday's trading range. And our gap today, which we can see, is a gap up. Yesterday we gapped up. We came down kind of to the closing 15-minute bar. We didn't fill the gap. We didn't trade in. We held yesterday's low, or the Friday's lows as well. And then we had that just kind of turn around, that bullish engulfing candle on the 15-minute, and then took off from there. There was a nice short on the 1-minute. That was a little double top here with this inverted hammer. Double top, nice little dip below, and then that traded down real nicely all the way to the 728 bar. And the key with trailing your stop is always you get these inside bars, just leave your stop alone. Like here's this bigger red bar, and we had 1, 2, 3, 4 inside bars. Just leave your stop above the high of that first breakdown bar. New home sales at the top of the hour. PMI composite, 15 minutes. There is a lot of earnings announcements rolling through this week, so we could see some larger gaps at the open. Also wanted to mark yesterday's high. It's here. When you have the the moving average here, and you have just the regular trading hours on, and then you gap, you'll get like this catch-up period where this 21 EMA is going to start for the morning from the close, and then it's going to like go straight up to catch up to price. Sometimes if we tag up on this trend line with a hammer, that can be a good like a half gap fill retracement, where like the 50 and then this 21A EMA catch up to each other, and then you get like a long at 50, 57 on the 1 minute chart. Making our way back up to these overnight highs. The prior day's high, low, and close have more weight than the overnight high, low, and close because there's more volume at those price levels. Our breadth and AD line are just okay. Overall, yesterday's day, closing as a spinning top, showing some indecision. It did close above the prior day's high. So if we break today's high, that should push us up to kind of tag up on this 21 EMA versus going lower before bouncing. I was kind of expecting this spinning top to be shifted down to where we broke the lows of Friday, but gap up and kind of held and then moved higher. $76.75 is yesterday's high. When you get a cluster of retracements like this where you kind of have, they break the 61.8 and then they go short and then breaks the 61.8 and goes short but then goes long. Basically no directional move here. You can just stay out of this area. You hear me say this all the time. Stay out of this area until we break above or below it, and then that break will tell you which way to start looking for retracements for, versus trying to anticipate and try and, oh, I'm going to take the short here. You don't get much follow through. Maybe you can get a first target, but not much follow through after that. My plan with the 3-minute trail stop approach, like splitting the position in half for the retracements that I've done for years and years and years, starting next month, I'd like to just do the trail stop. We've said time and time again that is more profitable. It's just a little harder to execute because you're not getting a quick first target, but you get a couple of runners and all of a sudden your P&L is considerably higher than if you just had taken 3 points on the first half of the position and then take the trail stop on the second half of the position. So if you're newer, I definitely recommend doing it that way because you get into the free trade, if you will, and then it ends up being easier to catch that runner. I'm watching this candle here for a hammer. Let's see if it forms. We have this PMI number though, about 20 seconds. That could be a little bit volatile. Okay, good. That's not going to be a hammer, so we don't have to deal with it. And just like that, that would have definitely had some slippage if you could have even dropped it on the second that it turned to the 15-minute mark. But okay, so above yesterday's high. I'm just going to get rid of the overnight high line there. Okay, now the trouble is this 15-minute. I was looking at the 1 minute and did not have that ready to drop. So 11.5 points for the first 15-minute bar. That PMI shot right through the prior bar and the highs of the day. So I didn't have enough time to drop the 15-minute order. I think I'll do a limit order at 50, 75, 50, the actual price. And if it gets hit, then we'll be in at that price. It would be just below highs of the day. It may come down and not fill it. You don't get too many numbers at the 15-minute mark. With a lot of earnings after the bell this week, they could, gap up one day, gap down one day, pulling on the market, especially with the bigger names that are part of the S&P or in the NASDAQ. The very first full halfway back of the day is always of interest. And then once we form the first hour's range, that halfway back is, I always pay attention to that. Sometimes we don't get to that 50% till later in the lunch hour, but that's a good one to connect the first hour of the day, high to low or low to high. The longer a bull flag goes sideways, so the pole being the big green bar, and then you have red bar, green bar, red bar. That's our 3 bars. Usually, after 2 or 3 bars of consolidation, you see the breakout. If the pole is up, then you expect the break to be up. And if this was flipped around, the pole was down. Cool little trick. Turn it upside down. If the pole is down, then the 3 bars consolidation, you'd expect to go down. If you're ever looking at a trend and you're a little bit unclear, just stick a negative sign in front of the symbol if you're in Thinkorswim, and you'll turn the chart upside down. And then if you were thinking about going long and you turn it upside down and you're looking at the chart and it looks like a short, okay, you're good. You're on the same page. If you are thinking about going long, you turn the chart upside down and it still looks like a long, okay, now you want to reevaluate. Still haven't caught up to this 21 EMA yet. Probably going to end up being like the full halfway back of the day if we can get there. Nothing really doing on the 512 tick chart yet. There's a 75.50 fill on that 15-minute opening range breakout that I didn't get in on the initial break, so I'll let that do its thing. I trade that in a separate account, so I just kind of drop the order, minimize the dome, and forget about it. Let's see if we get a hammer here. Still got a ways to go, 30 seconds. If we get a hammer here, I'd take that long. It's on top of yesterday's high. Nice little pullback, a little deep on this pole, but still well within the trend. And our 50% retracement lines up perfectly. So it's going to be a 77.50. Let's see if that holds. 50.77.50 long. 4, 3, get ready to drop the order. 2, and drop. And then the stop below the low. It's only a 3-point candle, which is perfect. 74. Okay, there it goes. And let's see if we get any movement or any follow through. Put that retracement back up here. I mean, that's very nice. As far as coming right down to the 50, we're right at the top of the prior day's high. We have to break through the opposing short. That would be the last stop of resistance here. And then remember, we've got, was it new home sales? Yep, at the top of the hour. So we need that momentum, that break of the 61.8 to happen pretty quick here, coming off of the low tick, which is good, but we don't want to see slowing and resistance here. I mean, not much we can do about it, but in an ideal situation, we come up and we break the 61.8 here, maybe get an opportunity to tighten our stop before the number in case it does, spike down. Then we have our stop tighter with presumably less slippage if it were to spike. You usually don't get too much slippage on the ES, but when something like this PMI number came out, that would have probably got a tick or two. Certainly would have on the YM or the NASDAQ. Sometimes in the NASDAQ, you can't even, like, your price on the trade ladder, it just shoots around so fast, it shoots off the screen and you're trying to recenter it, and it can be very challenging. Now, if we get 4 green bars in a row, I would tighten my stop behind that 4th bar. That would be an ideal situation here, coming up on the top of the hour. Otherwise, we have to wait for it to pull back and then bounce. So let's see if we can get. Doesn't have to break into new highs, but this bar needs to close green, and then the next bar would need to close with a higher high. What is this, 4 points? If we got an inverted hammer up here and we're butting up against the top of the hour, I might bring my stop underneath that. If we have a decent profit, I'm fine putting my stop underneath the hammer or above an inverted hammer. If I haven't had an opportunity to bring my stop up yet. It's like the rule of, okay, there's our fourth green push. So if we can get this candle to close, we'll, or when this candle closes, we'll bring our stop underneath this low. That's a real nice move, profit locked in with more on the way. And I wouldn't be surprised if this gives us an inverted hammer at highs, just because we are up at the top of the range here. Yeah, the rule that, you know, I guess it's a little bit of a contentious topic, but taking profit is super important. Obviously, we know that. A strategy like the 15-minute that's so cut and dry, straightforward, boring. So stop goes to 50.83 and a quarter. Kind of nice that that wasn't an inverted hammer, so we don't have to think about reversing it here. I'm going to trail each bar. So as soon as this bar closes, I'm going to put my stop underneath its low. Also halfway to the 15-minute target as well. Wasn't thinking that would bounce so quickly. As much as I'd love to, we're going to be 3 minutes to the top of the hour. So flipping this and going short, I'm just going to close it out. I'm not going to double up the order. So we got 20 seconds, unless it takes us out of the prior candle. This candle's getting kind of big anyways. Oh, there it goes anyways. So, all right, out of that long, that was a good one. Last week I said how the larger the candle, this isn't an inverted hammer, but if it's bigger than 4 points, it's not that you don't get winners when the candle's bigger than 4 points, but it starts to get a little bit less likely. So you just want to make sure it's a really good setup. There's some sort of other support or resistance there. Came right down to the 50 here. So I'm not going to do anything here until we get through new home sales to the top of the hour. But that was beautiful. 3-point candle, came right to the 50, entry right on top of yesterday's high. I mean, you know, that's what I mean when I say like confluence or other things lining up with the hammer itself. If I took everything off the chart, great, you have a hammer in the trend. That's the number one criteria, either a hammer in the trend or a hammer that's at like a double bottom or some type of low to make a reversal. The next thing that's nice to have, so that's like what you need to have, the hammer. A nice to have is a low tick. A nice to have is a 50% retracement. A nice to have is, you know, yesterday's highs where we're finding support. Sometimes, like if it's a Monday, I'm hesitant to say this, but if sometimes it's nice to get a little profit on the board. And so I tend to be a little more aggressive with my trail stops if it's the first trade of the week. Don't really do it. It's like more of a subconscious thing where if I'm in a decision of, you know, trailing each candle, like if it's a 512 tick chart, if I'm in a decision where, well, I could trail this next 61.8 or I could trail each candle, I'm likely going to be more aggressive, trail each candle, get taken out of the trade, lock in that profit, um, not have the opportunity to see the larger move just to get on the board with a little bit of profit. So then it's like you feel like you're playing with the house's money. The other thing that I do coming into the week, I kind of look at last week's profit. And so like taking the 15 minute, for example, yesterday's was a double stop out where the stop out, like each direction broke and then stopped out. And that, that can be hard to stomach for some people, and for good reason, because it's a bigger range. But if you come back to the prior week and you say, okay, 30 plus points in those 2 days that we had the 15-minute breakout from the week prior, and then you start this week and it's like, okay, yeah, I kind of gave a good chunk of that back off of just Monday's trade, but you're seeing it in a larger context of more trades. If you go back to the prior week, it's like, okay, if I start from, well, I just go back from the beginning of April here, and I tally up our profit coming into the week, then you're saying, okay, I'm coming in with like 40 points of profit, and gave back some yesterday, but you're still net positive on the month as a whole. So sometimes that can help, like mentally, not get so stuck on like one day of trade. Because then you say, oh, I'm not going to take it the next day, or oh, I'm gonna throw in the towel or change strategies, and then you have one losing day and then 3 winning days after that, and you don't take those winning days, and then you're even more upset. So being able to stay the course means you have to be able to suck up the drawdown. You have to be able to absorb the drawdown. Just like if you were, if you put, you can't do this obviously, but if you put 90% of your paycheck into your 401k and you weren't able to live off 10% of your paycheck, then you're going to have to pull money out of your 401k. So you want to find an amount that you can put into your 401k, or into your retirement account or your SEP or whatever, that you don't have to pull out, and you can afford to live off the other amount. So you're not drawing off. So when your 401k does have a drawdown, you aren't stuck having to pull money out. Not really any kind of a reaction off the top of the hour here with this new home sales number. Very strong new home sales too. And that's it for news. The housing market stuff is not moving the market too much, which is fine. It's also funny how you hearing about rate cuts are going to be pushed back. It's like, well, yeah, no expletive there. I can't see any reason for the Fed to cut rates here with such a strong market, but apparently I'm alone in that. And you got to think too, if there's more homes for sale, or if there's more housing, more activity, well, let me back up. More homes for sale yields more activity in the housing market from, moving companies and Home Depot and Lowe's and all that kind of stuff, painters and landscapers, and it only increases the supply of, or increases the demand for other services around the real estate and housing market. So things are going pretty good already. You start increasing the number of transactions by decreasing interest rates, and all of a sudden you have even a hotter economy and more jobs being needed. So this little hammer here is going to be, if it's a hammer, it's below this 61.8, but really it's still at a good juncture being on top of this 21 EMA. It is within the uptrend. We really haven't made a serious lower low. This kind of red candle here does a little bit, but if the body, yeah, it's getting kind of big. The body is big, the candle itself is getting kind of big, so no hammer long entry. Yeah, Stan, as far as puts on the daily, I would be interested not at the extension short, so not at 92.75 here, but really up at like a 51.57. It's not that I don't think we can't roll over at this 93. So like today at the close, you could put like a small position on, but it just we're pretty close to this 49.77 as well. And if we just go back and forth between the two, if we went from 50.93 right down to 49.77 in 2 days, then the puts could multiply pretty decently. But I'm not. It's not that big of a target. Whereas if we come all the way up to the 51.57, then we're further off of lows. It kind of gets more people thinking, oh, here we go, back in all-time highs, and then you have more room to drop from new long orders being put on, and then those can get sort of stops hit or flushed out and get a bigger, quicker drop. So the last put buy was pretty good. We had a good drop initially the very next day. Then we kind of slowed a little bit, but that's another example of like taking that quick profit. One in the hand is worth two in the bush. Taking what you have in unrealized gain, taking a small profit to ensure that the trade is profitable is worth it. I should get our 30-minute range marked up here. Not that it makes much difference, but that will be our high and their low. Yeah, if this was a hammer off of the 21 EMA, that would be a nice push or a nice setup because we came down. Like I said, we gapped up, so then it takes a while for the 21 EMA to catch up. You could expand your entry bars outside of the hammer, inverted hammer, but it's so cut and dry for a hammer and an inverted hammer that I don't do that yet. You could say, oh, well, this is a bullish engulfing candle. It is a little bit big relative to the prior candles, 5 1/4 points. But that is one option as a way to increase the frequency of trades. But I would prefer to just stick with hammers and inverted hammers and trade the 512, like trade the retracements on the 512, just because they can complement each other pretty well and fill in some gaps where there might not be a day with a lot of 1-minute trades. You sometimes get more retracements and vice versa. Or you could expand in the way of adding another market. So just out of curiosity, let's see if there was a hammer on NQ. Yep. And more importantly, I was looking to see if this was a hammer, and no, it's the exact same. So, you know, the indices are going to look a lot similar to each other. YM, NQ, Russell. Not so much the Russell always, but that's one way to expand. Or simply adding contracts, keeping the same setups, fewer setups, and just adding more contracts. And like we were talking about last week with this copy feature that a lot of platforms have now, like Tradevate, just go into add-ons and you can copy trades to multiple accounts. Various ways to do that. So you could trade, you know, 5 contracts in one account, 1 contract across 5 accounts. More benefit. That whole conversation came from sort of gaming the system a little bit with some of these, with like Top Step, to get through the combine and keep your risk down, keep your drawdown risk low, but then copying those trades across multiple accounts so that you can take a payout across multiple accounts, and it's kind of working the trading strategy into the parameters of the prop firm rules as far as drawdown and payout, and there's definitely some legitimacy to that. And then once you get your cushion, once you get beyond, you know, you get your funded account and you get a little cushion in your account, and you're beyond like the trailing drawdown, then you can start to be a little more conservative with your trail stops and hold on a little longer because you have more cushion in your account. So still not much seeing on the 512 tick chart. We don't have a full halfway back. I guess this was, at the time, this hammer was the full halfway back, but otherwise, you know, there's no little micro retracement off that, and at highs here, didn't really break a swing low to like come in here and take a short yet. So the double top is nice, but we're still in higher highs and higher lows, and what can happen is you fill out to be an ascending triangle where it's higher low, higher low, higher low, higher low. The highs are the same, and then you get the breakout. And I suppose today that would be a nice situation because of the 15-minute is a long, and that breakout can push us to the high of, or the target, the 20-point target. The 15-minute opening range breakout is one that I really don't like to mess with after entry. You know, originally I looked at different trail stop methods, trailing each candle, different profit targets, 10, 20, 30, etc. And time again, 20 points is kind of the sweet spot. Sure, some trades will rip and end up being a 40-point move, but a lot of trades may only go 22 points. So 20 points seem to be the sweet spot. And if you come in and start trailing each candle, you might get out for plus 5 points, and then the trade ends up continuing on. So when you're on a small time frame, it can be more advantageous, let's see, to this, when I'm on a smaller time frame, it can be more advantageous to take into account some of the inputs, like the 4-bar trail stop, for example. It's a very small time frame. The 1-minute chart, you have 4 bars, a 4-bar push in the same direction, very strong move, getting out closer to highs under that 4th bar is a nice way to lock in profit and capture most of the move. I could have sat in this hammer long, let the pullback come down to here. Now we've made a second top and we just broke the 30-minute high by a tick. And if we come down here, make another new high, I could bring my stop up again. But look where it would be. Let's say it's right below this bar. I mean, it ends up being right about the same price level as where we exited. That can be good and bad. If you're in a long for longer, it prevents you from taking another trade inside of this kind of chop. Also, if you're in a trade, it prevents you from taking another trade that could be a winner. But just going back to that, a bird in the hand is worth two in the bush. Taking profit on something you have is mostly better than hoping or waiting for something that you don't know is going to occur. Just like a quick nickel beats a slow dime. Another good saying, if you can take a smaller profit sooner, always take a little bit less sooner than waiting and waiting and waiting for longer. The crux of that is, or that inflection point, is when you build up enough capital where you can let it ride because the money becomes a lot less impactful. An extra $100,000, couple $100,000 doesn't change much. Ooh, that's a good one, Mateo. Egg today is better than the chicken tomorrow. Yeah, if you wait and wait and wait too long, all of a sudden your egg's going to be not an egg anymore. But the difference there is, I'm not saying when the trade goes 2 ticks in your favor, just get out. You still want to have a methodical process, a method for exiting the trade. And something like the 4-bar run, or saying, okay, if I get 5 points on the trade and all of a sudden I get an exit bar or a reversal bar, if I'm long and I get an inverted hammer, I'd be okay saying, well, we haven't gotten 4 bars, but we've moved 8 points and my stop is still below the entry candle. It's time to get out. And even with a 5-point trade, or that one was almost 6 points, this little long, you start, yeah, if you're trading a micro, it doesn't mean anything, but you shouldn't be concerned at all with the P&L with the micros. The micros are just for practice. If you're trading 1 or 2 contracts on the ES, yeah, it's not huge. $300 is 6 points on the ES. But now you start getting to like 4 or 5 contracts, and it's like, oh, okay, I'm up over $1,000 a day, or $1,000 for one trade. Okay, 6 points isn't a huge run, so maybe I don't have to swing for the fences every day to try and hit a home run. If a home run happens, great, but I can use the same swing every day, nice, consistent routine and swing, and you catch a few 4 or 5 point trades and you grow your account and grow the number of contracts, and it's not so far out of reach. It's not like, okay, I got to get to 15 contracts before I can get to $1,000 a day. It doesn't take that much. It's just getting over the hump of being able to scale, and either being young enough where that fear doesn't creep in of trading more contracts and having more risk, or growing your total net worth to where the piece of the trading pie is so small that it's like, well, yeah, I've got $25,000 in my trading account, but my net worth is X. My net worth is $500,000, $1 million, $3 million, and then you can be a little less emotionally drained by ups and downs in your trading account. It doesn't mean that just because you have the capital, you should trade 10 or 20 contracts, but with a few weeks of practicing and just kind of putting some basic parameters in to protect yourself from blowing up your account. Like that was the first thing that was instilled in me. Okay, you got to have some type of loss limit protections, bumpers, if you will, the 2 stop out rule, so that even if I take any old trade that doesn't at all go with my trading plan, if I hit my 2 stop outs, I'm done. So if I totally go off the rails and goof up, I know that I'm not going to really do any major damage. Okay, so this is the negative 23 of this very first halfway back long that where that hammer set up. And you might be thinking, oh, well, why not just take this is visible on like a larger time frame, 5-minute chart. Why not just take the 50% right at the, like right off the larger time frame chart? If you do that, you need to kind of like the 15-minute, sit back and have your negative 23% target there. You can't be micromanaging and trailing your stop within here, because otherwise, if you trail your stop behind this bar, you get taken out on the next bar. It didn't quite make it to the negative 23. And so then you're stuck with a small profit. If your stop is below the 61.8, it's not as good of reward to risk. And so waiting for a micro long to set up on the 512 tick chart keeps your risk smaller. Then you can you could trail each bar, do lots of different things. The other thing that we talked about a little bit last week, I think, is well, I'm going to hold off on that. I'll save that for another session. Above the 30-minute high now, above yesterday's high. And this is that ascending triangle I was talking about. The same highs, strong higher lows, pushing to the upside. 15-minute wise, getting close. We should get more of a push with like the low of the ascending triangle to high should kind of be the distance. So 75, 85, 10 plus points. We should be able to get a move up here. Inverted hammer is actually kind of decent. I said to myself I didn't want to short right on top of here because we just got the breakout. But that is a very, very tiny setup. So even if it comes up and had I been short, the risk is so small. But that's okay. I'll draw up the next retracement like that and see what occurs here. Maybe we get a hammer. Here's that 21 EMA down in a low tick. A hammer here would be real nice, especially if the tail touches the 21 EMA and then the head is up above the 50. So it's an 88 1/4. Is the long, and there it goes. And again, small candle. What is this? 2 1/4 points. Stop is 85.50. A So this is basically another higher low. There is a little, I mean, we could go a little lower and still be above the prior swing high. It'd be real nice if this thing just pushes and breaks out and kind of doesn't mess around here. We were in a low tick. So far, so good, but what ends up happening is if you have a strong uptrend like this, it's very easy to draw this trend line here. If you break that trend line, we could quickly drop to lows of the day because the first set of stops get taken out, next swing low breaks, and it's just like boom, boom, boom. You start just dropping very, very quickly. We do have this small swing low break right here on the 512 tick chart, but still worth a shot at the long. A nice little candle or smaller size candle. So we'll see if it can get the legs to push upwards. The 15-minute can go to -4. So -4 point stop on the 15-minute. Doesn't have too much more to go before that one would get hit. Okay, breaking our opposing, which is good. Yeah, I guess you would consider this the first green bar here, second green bar. Here we go. Let's see if we can push the rest of the way through our 15-minute. So we may get another 4-bar push right away. Even though this second green bar dipped below it, I guess we consider that a 1 green bar, 2 green bar. This is our third, and we'll see if we can get a fourth. If this came down to be an inverted hammer where the tail stuck above highs, I know we haven't moved too far yet, but that would kind of be a double top. That would be a solid reversal bar. Okay, good. You know what I mean? If this green bar had come down, so price went up and then was rejected, formed an inverted hammer where the head was kind of right at this prior high, that would be fairly bearish, but I think we're okay. We just got to push up a little more, make it to this. We need 95.75 to get 20 points. If this can push up, we can tighten our stop. One more tick, little guy. There we go. Sweet. All right, so once this candle closes, I'll consider this the fourth green bar. So just like the prior long, we'll put the stop. It'll be a 50, 90, 75 in less than 10 seconds. All right, there we go. 50, 90, 75. And then if this next candle can break its high, then we can tighten our stop under it, which is great because this fourth bar is kind of, the stop is 4 points away from the high essentially. So, and we need to go another point to get that filled. $93.75 is the low currently. $93.75 and move it in now. Okay, so stop on the 1 minute long is $93.75. There we go. Sweet. 20 points on the 15-minute. and I'll just keep trailing each bar. Once you get the 4-bar push up, where I bring my stop up underneath that 4th bar, I just keep trailing each bar. I don't switch back to, trailing swings, just because the thought process is, well, the move is going fairly straight up, so you want to just keep trailing. I'm glad I came back to limit order that 15-minute long after it, after the push up. And did that come? Yeah, that didn't even come 2 ticks in. Got enough for, went a point. 75.50 went into almost a point. Yeah, that was good. See, rather than chase it after this PMI number, just being patient, put the limit order. I don't know if I've ever had to do that before. Maybe one other time where it really ripped at the 15-minute mark like that. All right, 94.50 is the stop. Now we're running. Yeehaw. When you get a big bar like this, sometimes you get a couple inside bars. Perfect. Oh boy. Okay, 95 is the stop. We're getting a little far away from price. I feel like in a turn and but we need another 40 seconds here, and we can go up to, at the moment it's a 98.50. I'm just going stop up underneath each candle's low. What do we have above us here? Nothing, and that is why. Yeah, not stopping at that extension. 51.57 is the full halfway back. That is a ways away. All right, 15 seconds, 98.50. 5 seconds, 98.50 is still the low, or still the stop movement. Okay, move it. Bit of an inverted hammer. The body is about half the candle. I'm not going to bother trying to short. Once this trade's over, I'm actually going to just call it good. The trades that have been going today are the longs within trend. So in order to come back down to the trend, we'd have to fall a ways before making it back to this uptrend, which would take some time, and before getting another hammer that, or some type of long setup. So getting the 15-minute hit already, this being the second profitable 1-minute trade, that's a pretty dang good day right there. Can you go up another tick so we can move our stop in 3 seconds? Oh, inside bar, so no movement there. I'm just going to leave it alone. It's only a 4-point candle, so okay, good. Now that this one, see how this one poked above its high. This bar here is inside. This bar is inside the prior bar, so the stop stays down below the low. Because sometimes what happens is you get a couple bars sideways, the low of one of the inside bars gets taken out, but the low of the breakout bar does not get taken out, and then you can end up getting out sooner. Also, look down here. Had you trailed each candle from the onset, you get this little shake, this little dip here below the prior bar, and you would end up getting taken out. So that's why it's important to leave your stop at the start of the candle here. Okay, our low on this one, 51.01. That's an inverted hammer, so that may end up being the end of it. 51.01 is where your stop should be. Like I said, I'm not going to bother trying to short this one. It probably would get some type of a drop, even if it's just to the extension long, but Usually after a big winner, that's the session. A lot of times the bigger winners can be longer trades because you're trailing your stop for longer to get to that bigger winner. So we're already past the hour mark. So yeah, definitely would call it after this one. We're already up over 10 points. Plus the 5 3/4 in the last one. There it goes, and the 20 points on the 15-minute opening range breakout. So yeah, good session. I was getting kind of sick and tired of the slow, choppy, not a lot of setups, price action. Yeah, just one dividing down to one contract. That's about 40 points on the day. 38.5 points. You can do a lot with that, even with one contract, let alone 6, or 10 or 20. Like it, when you're scaling up your size, it's important to be very conscious of your risk per trade and the drawdown, because you can see the big numbers, the profit numbers, and they can be exciting, but they could also go against you. And if you're 1-to-1, if you're risking 10 points to make that 10 points, that's going to be a hard one to stomach. But if you're risking 2 points or even less, then it's much easier to absorb those little losses. And then also looking at the drawdown being, how many of those stop outs make up your losing streak. So a little bit of a drop on the break. Like I said, I mean, this inverted hammer is fine to short, but the context of coming off of a couple solid winners today, just don't need the extra risk. I mean, the candle itself is pretty small, which has been nice. We've seen 3. Man, these 2 hammers absolutely perfect. Right at the 50, right at the 21 EMA. If you just sat on your hands all week last week and didn't take it, I guess last week was a pretty good week. Going back 2 weeks ago, I had the one big trade on Thursday and then a couple stop outs, smaller stop outs on Tuesday. But the idea being, if you got through a slower week with a 0 at the end of the week, and then you come in the next week and you have, seemingly easy or easier trading, some good setups, you make a decent amount of money. Having a 0 for the week is totally fine. But being frustrated and saying, okay, I need to make $200 a day, so I'm going to force some trades, and then ending the week down big or just down in general. Then you come into this week, you're frustrated. Okay, I got to make back last week plus make more money for this week. And you end up carrying over those bad habits and then not trading well. So that's why having the 0 at the end of the week, or stopping if you don't see anything set up, or if you're just not having a great day, cutting your losses doesn't just help today, it helps the next week. Just like, I always relate stuff to sports and specifically cycling, but you need to fuel today for your ride tomorrow. So it's not so much about, recovering with the fuel that you're taking in. It's about, okay, or if I do a really hard workout today, how is that going to affect me next week? Yeah, I might feel, if I'm on a 3-week training block and I'm in week 1 and I feel amazing, I could go harder, I could do more intervals today, but how is that going to affect me on week 3 when I completely fall apart and I can't do those intervals? The block as a whole is not going to be as effective. And that is something I've been very, very good at over the years, and I think has been a big part of like my longevity and success in that training realm, to put together really good training blocks that allow me to race really well. Is you can stick to the plan early on when maybe your emotions aren't aligned completely, or your feelings aren't totally aligned. You're feeling, oh, I could do more, I could do more. But knowing that if I do more now, I won't be able to do more later, is the exact same thing with trading. It's a slow week. I have to make money this week, today. You feel like you want to do it right here, right now. And if you do, and you take those risks in an environment that's not giving you very good trade opportunities, then you end up not doing so good later on. Really killer day for 1 minutes. I mean, this one, I guess technically that wasn't a break of the low, but you got 1, 2, 3, 4 red bars. That one went down for another couple of points. Back to the 21 EMA, getting a little bit higher here, not even almost to a 50, but I'm good with being done for the day. And really good start to the week too. Yesterday, 1 stop out, the first trade, that was right off the open actually. Good little setup, but just didn't go. I took this hammer here. Tail was below this swing low in the body. That was a great little setup. But that one stopped me out. But then the short double top at highs was a good one. Trailed it down and ended up getting out all the way down here, because these bars, like I said, inside bars, so your stop stays up here. Next 3 bars were inside, the stop is here. Didn't have 4 bars, so I'm trailing the swing highs still. So you get this one hammer, pop, roll over, bring the stop to here. This move down, this wasn't a very big distance, between this hammer low and the hammer high here. The inverted hammer, like the entry, that was only a couple of points. And it wasn't even like we weren't even at lows yet. So I didn't feel like I needed to tighten above this hammer, because we really didn't have much profit in the bank yet. And then we rolled over. We got the 1, 2, 3, 4 red bars. Or if you want to look at it as 1 breakdown, 2, 3, 4 breakdown bars, excluding this first one. Either way is fine. And then just trailing it down from there. See how this push up above the hammer, we had 2 hammers, is a little bit slower. You're kind of getting up into like a larger consolidation here. 5-minute chart might show it, where you're kind of bull flagging on the 5-minute chart. So still a fine setup, but just a little slower to react off of the hammer. And yeah, there's enough setups with hammers and inverted hammers that you really don't need to do anything else. earlier I was saying as a way to expand, you could look at spinning tops, bullish and bearish engulfing patterns. But the one trouble with those, like a bullish engulfing pattern, is that candle needs to be larger than the prior candle. So even this one here, 5.25 points, here's a bearish engulfing candle, 7 points. That's getting pretty big. You know, the hammer in itself, just the movement of price moving down, bull stepping in, bouncing, or price being rejected, pushing back up, that tells you so much about, you know, the price action, the time and sales, everything that's, you know, you could be looking at as far as your bid ask and the time and sales and all that kind of stuff. It's all encompassed into that hammer candlestick, the emotion, the fear and greed, all that stuff. So it's simple, it works, but that's how trading is. Simple works. And if you can just prevent yourself from digging yourself giant holes from your own emotional desires or getting derailed, you know, having that self-control, then you can do quite well. And get rid of this one. We'll just leave the 30-minute high and low, but that's going to do it for me today. Good session. Definitely things are turning from a week ago, maybe a week and a day or two ago. 1 minutes have had a lot of big ones. A 20-pointer on the 11th. Well over 10-point trades last week. Yesterday had 13 points. Today had another 12.75 points. So definitely rocking and rolling. The EMA standard, you know, honestly, like, you don't have to have it on there. I could draw up the trend line just as well. And hey, look at that. It lines up with the 21 EMA. So that's really it. It's not like if we're above the EMA, I'm going long, and if we're below it, we're going short. That's what you don't want to do, that, because you could have a double top. Yesterday's was probably the case. Yeah, where we're above the 21 EMA. That's why I don't recommend a bunch of moving averages for people, because they think, oh, the EMA is in an uptrend, I have to go long. Or the moving average is in an uptrend, I'm above it, I have to go long. But you're not seeing, and then it's like, oh, are we rolling over? Are the two crossing? Let me wait till they cross. And by the time you get across, price is already down here. And then you're going short and price is already turning up. So putting it on the chart just as a way for me, oh, okay, I don't have to draw the trend line because the 21 EMA is there. You know, you could do this one here, this little inverted hammer comes up and touches the EMA. Okay, cool. We're at a downtrend line. We're at that 21, short below the hammer, the inverted hammer. Great. But even like something like this here, this one was a little bit big, but you know, drawing up the 50% retracement, that means a little more to me than just, oh, we're above the 21, so we have to go long. But if you can get over that, and don't have like 50 moving averages on your chart, then it's fine if you want to have it on there. But, you know, I can see the trend. I could see it without the moving average. I could see it with the moving average. I could put a trend line on there. It all kind of does the same thing. So maybe I'll end up taking it off, but it's not, I don't find it hindering my trading. So that's the one addition I've made here in the last couple of years to my charts. You know, we added the 1 minute strategy about a year and a half ago or so, but otherwise been keeping everything pretty much the same. So I think we'll leave it at that today. Good session. If you have questions, you can drop them in the Discord. Hope everyone has a great rest of your day, and we'll talk to you soon.